Hello people, let's quickly run through FM RTP May 2026. Overall, a pretty good RTP. They've added like 4 to 5 good questions or different types of questions. Remaining are repetitive. Okay. Now, in this particular RTP, we'll be running all the new questions. Whatever is newly added, which is not there, that will be quickly running by. Okay, first is a case-based question. Carefully, let's read the question. Before, as I keep telling you people, cases will be usually quite big. So don't waste your time reading the cases entirely first. Always have a quick look at the requirement. Quick look, okay? One, they're asking something about face value of the share. Then they're asking market price as per Walter Modulo. Something about optimum dividend payout ratio they're asking. Something about capital employed or earnings they're asking. And anything else? And then they are saying something about capital employed, estimated earnings growth rate. So looks like dividend decision and cost of capital ka combined wala case study. It looks like so far. Fair enough. I think this is good enough. So with this in mind, let's see what how we'll read the question and figure out. ABC is a new company, newly incorporated company. They commenced their operation 2024, it seems. Fine, by issuing equity shares at face value. And how many equity shares are there? 10,000. That's the main probably one information we may need. So 10,000 existing share company has. They ask face value. So maybe this information is probably helpful to find that. During the first 2 years of operation, 24 and 25, it has earned a profit of 1 lakh in 24 and 1 lakh 4,000 in 25. So looks like profit has increased by 4%. 1 lakh plus 4% if you do, you will get 1 lakh 4,000. So therefore, they have given growth rate to be 4%. 1 lakh for plus 4% automatically if you do 104 it is. Cost of equity they have only given 8%. Based on Gordon's model, market price of the share at the end of 2025 is given to be 162. Sir, what is Gordon sir's ka formula? D1 divided by KE minus growth rate. Looks like KE is available, growth rate is available, price is also available. Okay, so maybe use that information to find D1 maybe. Let's see. Okay, although information, no company has been following traditional dividend payout policy. Management is now concerned about whether this policy makes a full goal. They've given no full story they will give. All that main matter not required. We'll read. We have anyway read the requirement, so we'll focus more towards the value, not the stories. Now, finance team has been instructed to evaluate dividend policy both using Gordon and Walter. So both the models we need to use and figure out something. Okay, I think that's the only data available. Other than that, any numbers are given? No numbers. No numbers. Look, now let's read the first requirement once again. You need to find out the face value of the share as well as rate of return on retained earnings. That is R. They've asked R. Face value we'll figure out later. Now people, R. How can I get R? Is there any formula that targets R? Growth rate is given. Keep that in mind. G is equal to B multiplied by R. G is available. G is available. Somehow if you can find out B, somehow if you can find out B, R also you can figure out. B is retention ratio. Now 1 second, using this data what they gave cost of equity, growth rate, price of the share. Using this formula I can find out D1, right? If you know dividend is expressed on EPS. So that means if I can find out using D1, if I can find out dividend payout ratio, then I'll be able to find out the retention ratio also. If 70% is dividend payout ratio, then retention ratio B will be balance 30%. Yes, sir. I mean, that is our clue. Yes, sir. So can we do it now? Okay, Gordon's ka first formula. Tell me what is Gordon's ka formula? D1 divided by KE minus G. Substitute. D1 we don't know, but price they only given 162.24 is equal to D1 we don't know. Cost of equity is 8%. Growth rate is 4%. When you solve, you will get D1 to be 6.49. Till here, any problem, anybody? Okay. But one here, people, keep the dates in mind. Here, dates are important. Now, when did they give the price of the shares? Which year ka check? This is the market price of the at the end of 2025. The dates are important over here. So this is the price. This is the price at the end of 2025. So you already know the formula. For if you want P0, you will take D1. If you want P1, you will take D2 divided by KE minus G. If you want P2, you will take D3 divided by K minus G. So that means if this is the formula, or if this is the price for, if the price for 2025 means this D1 what they have taken, this is which year ka D1? Or 1 second pa. This is 2026 ka D1. Agreed? Because currently they have given price at the end of 2025. So D1 here refers to 2026. All of you are comfortable with this? Correct now? Now people, do you know? Now dividend you know. Now we want to know dividend payout ratio. How do you get dividend payout ratio? Dividend per share divided by earnings per share. Correct? Okay, now if this dividend is on 2026 platform, earnings also should be on 2026. But in the question they gave earnings for 2024 and 2025. Getting it? So, but we need 2026 ka earnings. But they gave one clue. What is that? 1 lakh became 1,04,000. That means growth rate is 4%. So next year earnings will be how much? 1,04,000 plus 4%. Agreed? So first find that. Profit for 2026 will be 1,04,000 plus 4%, which is 1,08,160. All of you got this? This is what? Total earnings. This is the total earning. Sir, how do you get dividend payout ratio? Dividend per share divided by earnings per share. Is this per share or total shares? Total earnings. Do you know the total number of equity shares? Yeah, given. So first line only they gave number of shares how much? 10,000. So what is the earnings per share? 1,08,160 is for 10,000 shares. For one share it will be 10.816. This is for which year ka earnings? This is for 2026. The dividend is also on 2026 platform. Earnings is also on 2026 platform. Any problem or so far good? Now can we find dividend payout ratio? How? DPS divided by EPS. Do that. Dividend per share divided by earnings per share. Do that. How much are you getting? 60%. 60% or 0.6. That means what is retention ratio? 60% of earnings if you are distributing as dividend means how much you are retaining? 40%. So B is 40%. Got it? Once more, any problem till here or all the numbers are okay? Pakka? How do you get G? B multiplied by R. Growth rate is given to be 4%. B just now we got it to be 40%. So how much is R, people? 0.04 divided by 0.4 will be 0.1 or 10%. Clear? Everybody good? Sometimes in MCQ you need to be a little smart. Okay. Sir, in this MCQ, they ask one requirement or two requirements? Two requirement. One is face value, another one is R. R we already got. How much? 10%. Now people, first option is face value, second option is R. Is first option the right? A is the right answer. No, R is 10%. Which has 10%? Either the answer will be B or it will be D. Sometimes what happens is only one option will have 10%. Only one option will have 10%. So second one should be have to solve or directly select the answer. Directly select the answer and move on. Sometimes ICA it does that. So when one requirement is done, automatically look for the option. If that is the right option means select it off. No need to even bother about the next requirement. Here there are two R's with 10%. So option will be either D or it will be B. Now I think I have to solve the face value. Can we try the face value? No question till here, no? All good? This is also very simple. R is how much? 10%. R is 10%. Now people, first year, equity shares, did you raise it in 2026 or 2024 only? 2024, how much is the profit? 1 lakh. Use your common sense. Profit you will earn on your capital. No? Profit you will earn on your capital. How much return are you, how much profit or return are you generating? 10%. And how much is it in amount? 1 lakh. That means your capital has to be 10 lakh. Do you agree? Because 10 lakh ka 10% if you do, then only you will get 1 lakh. 10 lakh ka 10% if you do, then only you will get 1 lakh. Agreed? Or use return on equity ka formula. What is return on equity ka formula? Each divided by equity. Each divided by equity. Or maybe I'll write it over here. Return on equity is equal to each divided by equity. Now, what is return on equity? R. That is 10%. 0.1. Divided by each, which is how much? 1 lakh. Divided by equity. Therefore, equity will be how much, people? Therefore, equity will be how much? 1 lakh divided by 0.1, which is how much? 10 lakh. Should you have to really solve this or directly you can check? 10 lakh ka 10% only. 10 lakh ka 10% only can give you 1 lakh. No. So automatically capital is how much? 10 lakh rupees. Agreed everybody? Now face value is very easy. Equity share capital how much? 10 lakh. What is the number of equity shares? 10,000. So that means what is the face value of one share? 10 lakh is a total equity share capital. Oh, we have 10,000 shares means how much is the face value? 10 lakh divided by 10,000. How much is that? 100 rupees. That's what I put up here. That means what is the right answer? Which has face value 100? B. That means B for Bengaluru is the right answer for this particular option. Okay, na Sarji? Clear. Move on to the next. Careful about the dates in this problem. All this quickly I'm solving. After, if you want later on, you can revisit this and watch. Okay, we'll upload this on YouTube as well. So you can refer this. Now check. What is the market price of the share in the year 2025? Dates are important. As per what? Walter. People tell me Walter Sir's ka what is the formula?
D plus R into E minus
P naught is equal to D plus R into E minus D divided by cost of equity. Whole thing divided by cost of equity. Yes, sir. Right, everybody? Now, don't be in a Josh and do off. Sir, D we already know, sir. D is 6.49. E we already know, sir. R we already know, sir. K given, sir. Taka tak badana, sir. D is 2026. E is 2026. They asked the price of the share for 2025. This is not growth rate. This is not Gordon Chachaka normal. That means we need all the data on which year? 2025. Yes, we do have D, E and all, but we have it for 2026. But we need it for 2025. How to find? Sir, if they have given you 2025 ka growth rate, if you know 2025 ka dividend, let's say that is 10 rupees. What will be 2026 ka dividend? 10 plus 4%, which will be 10.4. Yes, no. Now you have to do backward calculation. That's all. You know future value. Now we need to find present value. You have value after 1 year. You have value after 1 year. You have the value of for which? You have the value for which year? You have the value for 2026, but we need it for 2025. So we have a future value. We need a present value. How to find, people? How do you find present value? Future value into multiplied by discount factor. No. So simply just do that. What is it here? Growth rate is a discount factor. How much is it? 4%. Calculate. This is the future value and discount factor is 4%. Take this number and you do 1 divided by 1.04. How much is that? 1 divided by 1.04. How much is that number, people? See, check, I've done here. If you want, check the screen if you want here. Dividend for 2026 is 6.49. Correct? Till here all of you good? What is the growth rate? 4%. That means we need dividend for 2026 or 2025. So this becomes future value. This becomes discount factor. How do you find present value? Future value multiplied by discount factor. Yes, that's how we find future value. No, NPV problems. Future value multiplied by discount factor. This is your future value. Discount factor is 1 divided by 1.04. Multiply and you'll get 6 point how much? 6.24. Good or got it? Everybody sorted? And now we got now dividend for 2025. Similarly, we need EPS also for 2025. We have 2025 or 2026 ka. We have for 2026. How much is 2026 ka? 10.816. Same calculation. Find out EPS for 2025. Tell me. Same growth rate. 10.816. So into 1.04. How much, people? 10.04. Okay. 1 minute. Are we good with this so far? Everybody. Backward calculations. Okay, now Walter Sir's model, D plus R. Now plug in. Dividend do we have? How much is the dividend? 6.24 plus R you already know, 10%. Divided by K. K is given to be 8%. Into E minus D. E is 10.04. Dividend is 6.24. Divide and you'll plug in and you'll get the particular number. Okay, na Sarji? Yes, sir. What is it?
Sir, they have already given 2025 earnings.
They have already given 2025 ka? Okay. Another approach is also okay. That way also you can do it. Possible. But understood, everybody. Overall good. Pakka na, got it. What is it? That means what is the final answer you're getting? 143 we got. So the answer is C for Chennai. Next question. Chudama. R is how much? 10%. R is greater than cost of equity. Now they're talking about optimum dividend. We know Walter as well as Gordon. If R is greater than cost of equity, optimum dividend payout ratio is 0. Which option has 0? 0. Sir, now here checks here 60. 60 is right answer. 40 is right answer. 100 is right answer. Now which is the only option which has 0? 0. That means even should have to solve the other things or not even required. So C for Chennai, answer, go on. Move on forward to the next. Next, what is capital employed at the beginning of 2026? They're asking capital employed at 2026 beginning. Growth rate you already know. How much is it? 4%. Estimated earnings for 2026. So three things they're asking: capital, growth rate, and earnings. They asked EPS or earnings. I think we already found no. What is earning? Here only we wrote 2026 earnings we have. Somewhere we read here only. Where it went now? Here, what is the earnings for 2026? 108, 160. So again do a done now. Done. Which option has 10,000? 108, 160. Check. 108. Earnings is last number. Last number you should look for 108, 160. Which one has that? C. Only one option has that. So that means answer has to be C for Chennai here again. Clear? Earnings we already did. One if you figure out, means you already know the answer. You can move forward. Yes or no? Correct or no? Correct. Now what is the capital employed at the beginning of 2026? Then they're asking growth rate. Then they're asking earnings for 2026. If the company, sir, it looks like same question, but hang on. This question, may read it if you want. They ask capital employed 2026, growth rate and earnings if company continues with what policy? Current dividend policy. Current, whatever currently they're paying. What is the current policy? 60% is a payout ratio, 40% is retention ratio. That is our current policy. If current one continues, what are these three data they've asked in question number 4. Read requirement number 5. Same thing. Capital employed, growth rate, estimated earnings. If company adopts optimum dividend payout ratio in 2025. Sir, they've given 1 year data, 2 year data. 2024, 2025. Okay. In 2024, may company followed optimum or only in 2025? Once more. What now? If you want, I'll write the data there. What is the dividend payout ratio, people? 60%. Okay. So what is the retention ratio be? 40%. Correct. Now, when did the company follow optimum dividend payout ratio? From 2024 or 2025? So from 2024, company continued this only. This policy only company continued. Yes, sir. In 2025, what do you think is the optimum dividend payout ratio? We already know R is greater than cost of equity. When R is greater than cost of equity, dividend payout ratio should be 60% or 0%. And therefore, retention ratio should be 100%. This is what company is following. Correct? First year, May 2024, May they followed normal dividend policy. Optimum dividend policy, company applied only in 2025. Easy. Understood this question. Huh? Everybody good? And now, they ask capital employed. Sir, how do you get capital employed? Equity share capital plus retained earnings, because we don't have debt here. We don't have preference shares. Equity share capital, you already know. How much? 10 lakh. Retained earnings. We have 1 year ka retained earnings or 2 years ka? 2 years ka. First, 2024. Check. How much did we earn? Check the question. 2024 mein how much did we earn? 1 lakh. Next year mein 1 lakh 4,000. Now make me happy. In 2004 mein company earns 1 lakh, means fully they will retain or 60% they will pay off. 60% they'll pay off. How much they'll retain? 40%. That means what is retained earnings ka balance? 1 lakh ka full or 40%? This is for which year? 2024. Correct? Huh? Now they ask the capital employed for 2024 or 2025. That means we have next year also profit. How much is next year profit? 1 lakh 4,000. Next year may company followed optimum. Optimum means they paid any dividend or no dividend. Means 100% they retained. So that means this is 1 lakh 4,000 ka 100%. Calculate what is this? This is how much, people? This is 40,000 and this is 1 lakh 4,000. Therefore, what is capital employed? 11 lakh 44,000. Agreed. That's what I've put it in individually over here. Total answer is 11 lakh 44,000. What is this 11 lakh 44,000? Capital employed. Check which option has. For capital employed is the first number. Which first number has 11 lakh 44? Not this, not this, not this. This. So I mean, therefore, what is the answer? D for day. One if you have got it. Other one required or not required? Directly select the answer. That way, good question. Good framing, I could say. because they have given 24, 25, sometimes they are asking 26, so again 24, or like this, they are jumping to and back and forth. That way, a good question, this one is. Everybody got it up? You want me to give you a summary of this question or manageable? Okay?
In that first MCQ, you found out equity ratio. Sir, why can't we use each divided by KE for this?
Which one?
To find out equity.
Each divided by K, if you do, you will get market value of equity. S you will get. That is S, not that. Okay, so that will not work. Okay. Comfortable? Okay, so that means we'll move on to the next. Okay, next MCQ question is this. This is Faltu. Check. Current liability comprises of two things: bank credit and other liability. Maybe we have a short-term bank loan and some other liability, and they are in what ratio? 2:1. Current liability is 3 lakh. Oh, that means can you find out components of current liability? Components are in what ratio? 2:1. What is the total current liability? 3 lakh. Therefore, what is bank credit? Bank credit will be 3 lakh in 2:1 ratio. So 2/3. How much is this? 2 lakh. So what will be others? Balance 1 lakh. Fine. Now they ask current ratio is 2:1. Current ratio is 2:1. How do you get current ratio, people? Current assets divided by current liability. How much is that? 2. Current liability is given as 3 lakh. Therefore, what is current assets? Current asset is 2 times of current liability, which is how much? 6 lakh. Any problem? Then they give quick ratio 1:1. What is quick ratio ka formula? Current assets minus closing stock divided by current liability is 1. So current asset you know, current liability you know. Can't you find out? Closing stock. Substitute. Current asset 6 lakh. Current liability 3 lakh. When you solve, you will get closing stock 3 lakh. Check what did they ask? They asked bank credit value and inventory value. What is bank credit value? 2 lakh. What is inventory value? 3 lakh. So 2 and 3. Option B, Bengaluru. This is very, very straightforward question. Nothing here. Move on to the next. Sir, capital gearing ratio. Capital gearing ratio ka formula, tell me. Capital gearing ratio means what? Using fixed cost instrument to increase shareholders' equity. So how do you get capital gearing ratio? Basically, fixed cost instrument in numerator. Preference share capital plus your long-term debt divided by equity or net worth. So, take your calculator. 12% debentures is 50 lakh. Preference share capital is 25 lakh. Term loan is 15 lakh. All these are fixed cost instrument. It will come in the numerator. Add 50 lakh, 25 lakh, 15 lakh. How much? 90 lakhs. Okay, fine. Equity share capital, how much? 48 lakh. Reserves and surplus, how much? 24 lakh. How do you get equity or net worth? Equity share capital plus reserves and surplus. Yes, no, people? So in the numerator mein preference share capital plus debt to. Denominator mein equity. Equity means equity share capital plus reserves and surplus. Anything here or easy only? This is pretty straightforward. Yes or no? Okay, that's your capital gearing ratio ka MCQ. Can I move on to the next? Okay. Ratio question not there. We have a similar question. When I write NR, it means not required. We have a similar question already there. Cost of capital is a good question. I don't know, maybe this time when they constructed RTP, MTP, no, maybe they thought too much on the mathematics. They've given a lot of questions based on equations. Mathematics, simple mathematics they've used and constructed at least 4-5 questions we have seen. Okay, this is I think one such question. Check. Zebra Dynamics is a diversified engineering firm, is currently undergoing strategic review of capital financing. Fair enough. Board has strict, this is not MCQ, this is a descriptive question. MCQ is over. The board of directors have strict hurdles for new project. Chief Financial Officer has stated cost of capital based on book value weights. Book value weights, cost of capital means KO based on book value. How much? 11%. Overall cost of capital KO based on book value is 11%. While the cost of capital based on market value is 150 basis points higher. Sir, 100 basis points means 1%. 100 basis points means 1%. Normally you will see RBI raise the BEPS by, they'll say basis points. Okay, that's a common language. 150 basis points means how much percentage? If 100 basis point is 1% means 150 basis points will be 1.5%. So based on market value, KO is 1.5% higher or lower. What did they give? Is exactly 150 basis points higher. That means what is KO based on market value? If KO based on book value is 11 means KO based on market value will be 1.5% more. How much is that? 12.5. 100 basis points is 1%. So KO based on book value, based on market value is given. Need a minute or move on? Easy now so far? Okay, next. Some benchmarking data they have given. Now, to determine the cost of equity, the finance team has gathered two comparable peers. To find out cost of equity, our competitor ka few data we have gathered. Our competitor name is A Limited, B Limited. A Limited beta 1.2, B ka is 0.8. Expected CAPM return. Sir, CAPM model, what's the formula? RF, cost of equity is equal to RF plus beta into RM minus R. Agreed? They've only calculated that. A Limited ka cost of equity how much? 15.2. B Limited ka cost of equity how much? 12.8. This is ours. Now we are zebra. Not literally. In this question, we are zebra. This A and B is our competitor. Fine. Competitor company ka cost of equity we have gathered based on which model? CAPM. Keep that in mind. Now some book value terms they've given. Check. The company maintains traditional balance sheet with equal ratio of equity and debt. Sir, this is on what terms? Book value. They're saying book value, we have equal ratio of equity and debt. That means weightage of equity and debt is different or same? Me telling or question? So that means indirectly they're saying is what? Weight of debt is 0.5. Cost of, weight of equity is also 0.5. Yes, no people, because total weight is always 1. So that's what they gave you. This is based on what? Market value or book value? Based on book value, weight of equity and weight of debt, both is 0.5. Move on to the next. Now they have given market value. Read this again carefully. Due to the market optimism, company equity trades at a premium. Market value of equity is 3 times of book value. If book value is 100, market value will be 3 times, which is 300. Whereas debt will trade at par only. That means debt ka, what will be the debt ka market value? If you want, you can just write over here. Book value, equity, debt. If equity and debt ka book value different or same? That's what they said. Right? If book value of equity is 100 means market value will be 100 or 3 times more? 3 times more. So equity ka market value will be 100. What about debt ka market value? That is also premium or at par it will trade? That means debt ka market value is how much? 100. Agreed. That means you tell me what is the weight? As per book value, the weightage is 0.5 and 0.5. Here it will be what? 3:1. 3:1. Correct? 300 is to 100 means 3:1. 3 divided by 4 is what? 0.75. And the other one is 0.75 and 0.25. Agreed, people? Weightage in market value terms, weight of equity is 0.75, weightage of debt is 0.25, because the ratio will be it will be in the ratio of 3:1. I'll give you a minute. If you have any doubt, ask. All okay? Numbers are looking fine for everybody? Pakka? Yes, Aji? And now, people. They've given some more data. Again, when the question is lengthy, always have a quick review of the requirement. They asked breakdown of component cost. Sir, here we have two components. What are those? Equity, debt. Both ka cost they are asking. That means they are asking cost of equity and cost of debt. And they have given KO. They have given KO. That is a clue. Simple formula. Sir, KO ka one-liner formula. Tell me what is it? Either you can put that table or you can take what? Cost of debt into weight of debt plus cost of equity into weight of equity. Fine. And this KO they have worked once or twice. Once based on book value, once based on market value. So KO is given, weights are given. That means you need to you'll get two equations. Substitute and get cost of equity and cost of debt. Mathematics. That's all. 2 times. This is the equation based on book value. Same equation you will get KO based on market value. Only component missing will be KD will be missing. Cost of equity will be missing. One you need to substitute and get the answer. It's pure maths. Nothing to do there. Okay, like this you have 3-4 questions in this RTP MTP. They've constructed like this only. I've solved. Can we review? Everybody understood what is the structuring here? Okay, now look at the requirement. First, KO as per book value. KO as per book value. What is KO ka simple formula? Weight of debt into cost of debt. Weight of equity into cost of equity is equal to KO. First, what is the KO as per book value? What is the answer they gave? As per book value, the KO is 11. And as per market value, it is 12.5. So we are doing book value first. KO is 11%. Sir, in book value terms, equity and debt ka weightage different or same? Same. Just now they told. What is the weightage of debt then? 0.5. What is the weightage of equity? 0.5. KD we know or cost of equity we know? We don't know. So that is as it is. Now substitute. One you substitute. Either you try to calculate KD or you try to calculate KE. Now if you want to find KE, tell me, how do you solve this? Send this to the other side. So it will be what? 11 minus 0.5 KD. This is 0.5 times of KE. So this 0.5 you will send it to the denominator. It will become what? This will be the equation. Any problem in this? Once more or got it? Pakka na? If you want me to write it once again, if you want to write, I will write it like here. 0.5 KD. 0.5 KD plus 0.5 cost of equity is equal to 11. I will keep it in percentage. Therefore, what will be? 0.5 cost of equity will be 11 minus 0.5 times of KD. Therefore, cost of equity will be what? 11 minus 0.5 KD divided by 0.5. That is what directly I have written in one liner. Manageable. So now, cost of equity I have expressed in what terminology? Cost of debt wala terminology I have expressed that. Okay, we have one equation, we have one more equation. We have only this equation or one more equation. What is one more equation? This is based on book value. We can construct one more equation based on market value. Or 1 minute. Observe if you have any doubt in this. This is okay, no? Pakka everybody. Balcony. Okay. Now next, you guide me. Let's see. Same KO. Now you will find based on market value. And market value weights missing a given. We already found out here. Market value of equity is 3 times higher than book value. But debt ka value is 3 times higher or same? That means what is the weight of equity and debt? 300 is to 100 or 3 is to 1. So if you do that, it will be 0.75 is to 0.25. Correct. And this is the weightage of equity and debt. And do you know KO as per market value? Yeah. KO as per market value is 150 basis points higher. So that means what is KO as per market value? 12.5. So find another equation again. Same KO as per market value. What will be the equity and debt ka ratio? 3 is to 1. So therefore, same equation. KO we already know based on market value 12.5. Construct. This is your way to get KO. What is the weightage of debt here, people here? 0.25. Cost of debt you know or don't know? Don't know. Weight of equity? 0.75. Cost of equity know or don't know? Is equal to KO 12.5. Solve as much as possible, solve, then substitute. This is 0.25 KD. Instead of cost of equity now, instead of cost of equity, I will substitute. What is cost of equity? 11%, or you can just write 11. 11 minus 0.5 KD divided by 0.5. Wherever K is there, here instead of K, I'll substitute. What I'll substitute with? This particular number. 11. 11% is 0.11. Minus 0.5 KD divided by 0.5. Understood? Everybody good? Now solve this equation and you will get KD as 8%. Pure mathematics. 2 equation is there. One you'll have to get on as express on the other, solve and get the answer. I've solved it. In case you need some more time to review, you can review. Or got it? No problem, no? Sir, if you know cost of debt, can't we find out cost of equity? Cost of equity is 11% minus 0.5 times cost of debt divided by 0.5. So solve now. Therefore, what is cost of equity? 11% minus 0.5 KD divided by 0.5. Solve this. If you take this in decimal, final answer also will be in decimal. If you take percentage, final answer will be in percentage. Your call. So cost of equity will be how much? 14%. That's it. Someone has used their kidney too much here. Mathematics kidney too much they've used. Okay. No, the FM concept, nothing. It's become pure maths now. Moana. So that is the first requirement of the question. Breakdown of components ka cost. Component cost means KD and cost of equity found. Can we read the second requirement? Now read the second requirement. Calculate corporate tax rate. Again mathematics. Calculate corporate tax rate applicable to the company, assuming that this line is important, assuming discount on issue or premium on redemption are also tax deductible. I discussed this on day one. Let's see who remembers it, who tells me this particular line. One, or maybe I'll read you one more data. We've not read this data. I'll read this. Debt capital is raised entirely through debentures. What is the interest rate on debenture? Coupon rate means interest rate. What is the interest rate? 7%. These debentures were issued at a discount of 100. For how much value? 90. So issue price we know 90. Debentures are redeemable at par. Par value is 100. What is the tenure of the debenture? 4. I mean, this is irredeemable debt or redeemable? Redeemable. So, redeemable debt ka what is the formula? Interest into 1 minus tax rate plus RV minus NP divided by N. Whole thing divided by. Okay, now everybody, the two check points you need to be careful over. Cost of debt missing or already got. Just now we worked no much, 8%. KD we know. KD we know. Okay, interest they've only given. Face value is 100. 100 interest is calculated on face value. Face value is 100. Interest rate is 7 means interest also you know. Tax rate not given. We have to find. RV redemption is happening at par value given. Net proceeds. Issue price. Flotation cost not there. Flotation cost not there. N given to be 4. So means every data in this particular formula is given except T. Solve to get T. That's what they are asking. Yes, sir. That's the first part of the problem. Everyone good with this so far? Now read this line once again and tell me what is the hidden adjustment. Calculate corporate tax rate assuming discount on issue or premium on redemption are also tax deductible. Perfect. Perfect. Sir, we do 1 minus tax rate next to interest. Why? Next to interest we do 1 minus tax rate. Why? Because we get tax benefit. We get tax benefit. Now tax benefit you will only get on this or also on this. Also on this. That means here the formula is not this. You also have to multiply 1 minus tax rate to this. That's all as a hidden adjustment. Okay, now everybody. Because they told in the problem this portion also is a tax deductible or you will get tax benefit on this. That's your formula. Every component given except T. Solve and get it. I've just solved it for you here. Check. KD is equal to interest into 1 minus tax rate plus RV minus NP divided by N into 1 minus tax rate. Whole thing. KD we already found. KD is how much? 8%. Interest is calculated on face value. Face value is 100. Interest rate is 7%. 100 ka 7% how much? 7. 1 minus tax rate. Tax rate don't know. RV is how much? 100. NP we issued at a discount of 90. They only told. Divided by N what? Tenure. Life how much? 4 years. Into 1 minus tax rate, don't know. Divided by RV plus NP by 2. Solve this equation. Finally, you'll have solved as much as possible. Right? So finally, you'll get T to be 0.2 or 20%. You want me to take you through this solving or okay na? Manageable, no? So finally, T will be what? 0.2 or 20%. Again, proper kidney. Okay, but they brought in this also. That was good. Till now, this adjustment was not tested. This portion was never tax deductible. There was a formula in ICI material which we had discussed. I think we discussed in class also about this. But it was not applied. Now it came as a new fitting. That's a good takeaway of this particular question. Need a minute to review or can I move forward to the next? Okay. Third requirement. One more we have here. Calculate beta of the company. Sir, beta of the company is this, sir. No, this is the beta of our competitor. Now they are asking we are zebra. Our company ka beta they are asking. Which formula uses beta? CAPM. Tell me CAPM ka formula. RF plus beta into RM minus RF. RM not given. RF not given. Beta also not given. How to find? Correct? No. Where is RM? Where is RM? Not given. Where is RF? Not given. Where is zebra ka beta? That's what we need to find. But cost of equity of Zebra, we already know. We found in first line. Tell me once again, correct only. What you told is right only. What did you say? Equation. Once more, give me. They've given competitor ka, no. Competitor ka. One they've given or two competitor ka. Like there it was book value, market value. We had two equation. Here competitor ka CAPM model you use, you'll get two equation. Substitute and get RM and RF. Substitute and get RM and RF. Market rate, will it be applicable for company or every company? RM is also applicable for one company or a common number? Common number. So you have to again get two equations from this competitor data, solve that, get RM, RF, substitute and then get beta of Zebra. Pure maths, nothing in the FM over here. Okay, now, okay, just check. What is CAPM model ka formula? RF plus beta into RM minus RF. First, they have given cost of equity of A Limited. They've given cost of equity of A Limited. How much is that, pa? 15.2. Beta of A Limited, do you know, na? 1.2. Cost of equity is 15.2. RF, you don't know. Beta is given. Beta is how much? 1.2. RM minus RF, you don't know. So solve as much as possible. Solve. You will get this. You will get this. Now either you will substitute for RM or you will substitute for RF. Your choice. I have substituted it for RF. So how do you get RF here? In this equation, how do you get RF? Send this to the other side. So it will become what? 15.2 minus 1.2 RM. Correct, no people? Or maybe I think this is, okay. RF, send it to the other side or this is negative, no? So this comes to the other side. Send this to the other side. So it will be 1.2 RM minus 15.2. Whole thing divided by 0.2. Clear, Aji? Pure equation substitute. Need a minute to review this or you can solve this equation. Like this, we have one equation or even B Limited ka. B Limited ka equation also we have. Cost of equity of B Limited is given to be 12.8. Beta of B Limited they have given, but RM, RF not given. Solve, and once you get a particular number, substitute. Wherever here RF is there, no, instead of RF, what I'll write? 1.2 RM minus 15.2 divided by 0.2. Substitute. And when you solve, you'll finally get RM to be 14%. Through RM, you'll be able to get RF to be 8%. Pure substitution equation solving, nothing else. If you need some more time, I'll wait. Or if you think, no, overall we got it, fine. Got it. RM over, RF over. Cost of equity of Zebra also, you know. That means only thing missing is what now? Beta. No, you will get it. Here, cost of equity of Zebra is RF plus beta into RM minus RF. Cost of equity of Zebra we already found here first only. How much is that? 14%. So this you already know. 14%. RF we just now got it to be 8%. Beta of Zebra we don't know. That's what we need to solve. RM we know. RM is 14%. So solve and you'll get the beta to be 1. That's the thing. That's about this question. A good question according to me. Okay. Totally new. It was not there at all. Okay. And that way good. Again, these are easy questions, but do watch out for the time. Maximum it will be like 8 or 10 marks question. So 15 to 20 minutes tops. Maximum 25 minutes. Now beyond that, danger zone. Okay, but you know, now you know, no, these sort of questions also can be constructed. Now you can solve it faster. They did not ask this directly in the paper. First they have given it in RTP. So at least once we can practice, so we can be aware that these sort of question also can be constructed. And if it comes in future, we can manage them. Even if you can't solve fully due to lack of time, at least half if you solve also, you will get 5%. Out of 10, you will get 5 to 6 marks. Full you can solve, but you might take a little extra time. So watch out for that. And don't keep people here I've solved. No, don't solve every line. Every line solving is not required. Okay, just substitute to the extent possible, and if you can directly get in your calculator, do it. No need to show each step in exam, solving step. I have shown because some of them may not get it. Because not everybody is mathematics students and they may need some help. So as much as possible, as detailed, I have called out. In exam, to the extent you feel is required, you do. If you are able to directly jump to the final answer, stop at that step and jump to the final answer. Each step showing not required. I mean solving. Now according to me, this question is over. What about you? What macha? Picture, how you will take picture? This whole thing you want, huh? No. Okay, take at least 2-3 picks then. Fine. Okay, next. This one approach. Same question is there over here. So we don't have to do this. It's a repeat question. Leverage, one good question. Again, some kidney they've used. We will see what we can learn from this particular question. Leverage wala, question number 7. Careful. 1 or 2 datas, I think there is some easy only. But 1 or 2 datas we can interpret wrongly and kind of it can change the direction of the answer. ABC manufacturing company produces industrial components and when well-established company operates under special tax-free status. Tax-free status. That means for this company tax is there or tax is nil. You know later what they'll say. Tax rate is 20%. That is the general market ka tax rate. But this company has tax rate or tax-free status. So that means for this company applicable tax rate is 0. That's it. Okay, and it exempts from income tax obligation. Fair enough. They've given some data for the current fiscal year, current year. Capital invested, how much? 20 lakh. Capital does not mean share capital. Capital in FM means long-term source of finance. Equity, debt, preference share capital put together. How much? 20 lakh. Cost of equity, 12. Cost of debt, 6%. And then they give WACC. That means company has only 2 sources of finance, equity and debt. Cost of equity, cost of debt given. WACC is also given. That means what do you think drama is here going to be? Weights. Last time they had given weights, so and they asked us to find out cost of equity and cost of debt too. Here they have given cost too and asking us to find weights. So same sir, equation sir. Don't know, we'll see. Now annual sales how much? 24 lakhs. Variable cost is 50% of revenue or sales. Fixed cost is 10 lakh per annum. General corporate tax is 25%. Relevant for us or not relevant? Because we enjoy a tax-free status. For us, the tax is 0. This is just given to confuse. If you take this number, whole answer will change. So this is not relevant. So I've written it out there for you. Now requirement though, they're asking optimal debt equity composition. Optimal debt equity composition so that weighted average cost of capital is how much? 9%. That's what they told here. No, WACC or KO is how much? Optimal equity debt composition. Andre, what are they asking? They are asking debt ka and equity ka amount. Total capital is how much? 10 lakh. In this 10 lakh, how much is a debt to how much is equity? Basically, they're asking weights only, people. They're asking weight of debt and weight of equity. That's what they're asking. Cost, you know, in this problem, weights is missing. But we have 2 equation or only 1? No. Here on where? 2 only. Only 1 KO given. No. They have not given 2. They have only given 1 overall cost of capital. But still we can solve. And now leave this requirement. Oh, tell me, or maybe first maybe in this problem interest, I'll just put up the table. Remember your cost of capital ka overall cost of capital we used to solve under table approach. What is that table? Source. So maybe we'll okay. So after source, we used to write the market value or book value. Okay, let's assume book value here, and then weight. So after tax cost of capital, and then you used to get KO. Fine. In the source column, we used to write equity debt. Done now. Now, do you know cost of equity? Yeah, cost of equity given how much? 12. Cost of debt 6%. So this is 12 and 6 given. Weights given are missing. Total we already know is 20 lakh. Equity and debt put together is 20 lakh. What is the weightage? We don't know. But one thing we know is total weight will always sum up to 1. That we know. If you know, if this clicks, problem solved. Tell me how? X. If weight of equity, if you assume it as X, so or since here we have to multiply, whenever multiplication comes, I don't like to assume X because I don't like my X. Yeah. So whenever this comes, I'll assume it as a different variable. What happened? A, B, something is good. Because you have to multiply, no? When I write x into x, so it will be like, you will not know what is variable, what is multiplication, will be confusion. So hence, I would like to assume another variable, which is what? A or B. Let the weight of equity be A. Let the weight of equity be A. Therefore, what will be the weight of debt? Total weight we already know is 1. So this will be 1 minus A. Correct? Huh? So how do you find KO? Alignment error. This is 12 low, this is 6. So how do you find KO? These two ka multiplication, 12 these two ka multiplication. The total should be equal to 9%. Solve the equation. Because these two ka addition only is 9%. No? Solve the equation and you get the answer. That wala problem. Pure again, this is a match wala question. Nothing to do with your any of your FM concepts. Understood? So now see how we have put forth here. See if it makes sense. They're asking optimal debt equity ratio. I've assumed let the weight of the debt be A. Weight of the debt, let it be A. That means weight of equity will be 1 minus A. How do you find KO? Without table, one-liner formula for KO is what, people? Weight of debt into cost of debt. Weight of equity into cost of equity. KO, they only given in the question 9%. Weight of debt, I've assumed it to be A. Cost of debt is 6% given. What will be the weight of equity? 1 minus A into 12. Solve and you will get the A to be how much? 0.5. What is A we have assumed? Weight of debt. Sorry, weight of debt is 0.5 means weight of equity is also 1 minus A, which is 0.5. That means what is the combination? Different or same? Total capital how much? 20 lakh. And weightage is same means equity ka value 10 lakh. Debt ka value also 10 lakh. That's the first requirement. That's all. Wait. 50%. The weightage is 50% equity, 50% debt. Any problem in this? I wrote, he's like, you did mistake. Da, correct, da, he's saying. Okay, Macha, thanks. He's saying I should have written 20 lakhs. Thanks, Macha. 20 lakh ka 0.5 is 10 lakh. Correct. Sorted, Okay. Next, I think next requirement, this is faltu now. Check. Prepare a comprehensive income statement. They've given sales. From sales, we'll have to arrive income statement to showing profitability from operations through net income. I mean, they're asking us to go up till net income. Net income means PAT. Or EASH actually. EASH we call it as net income. But anyway, preference dividend is not there. So PAT only will become EASH. When three circumstances. One Allah. When cost of debt is 6, 10 and 12. When cost of debt is 6 or 10 or 12. This is easy, no? Anyway, tax rate is not there. So cost of debt, you can say cost of debt is 6% or you can say interest rate is 6%. Tax is not there, no? So interest, basically they are saying interest rate in first case is 6%, second case 12%, third case 6 to 10 no 12. Okay, check the things. Do you know sales are how much? 24 lakh. That means one case we'll have to solve or three case. When cost of debt is 6, 10 and 12. Sales given 24 lakh. Variable cost, I think they told is 50% of sales. No, variable cost is 50% of sales. Sales minus variable cost will give you what? Contribution. Fixed cost, they only given in the question to be 10 lakh. From contribution, if you reduce FOC, what are you going to get? EBIT. Correct? And now interest. This changes. Check. In first case, what is the interest rate? 6%. How much is your total capital? Total capital 20 lakh. Debt is 10 lakh. Equity is 10 lakh. Debt is 10 lakh. Interest rate on debt is 6%. How much will be interest? 10 lakh ka 6%, which is 60,000. First case. Second case, interest rate they are telling 10%. 10 lakh debt to interest rate 10%. 10 lakh ka 10% how much? 1 lakh. Third case, interest is 12%. So 10 lakh ka 12%. 120. So EBIT minus interest, if you do, you will get earnings before tax. Tax rate is not there. E2, issue, net income, everything will be same. Clear up, people? That is what they asked in second requirement. This is over. This is faltu, I think. Pretty straightforward. Can we read the third requirement? Yes, sir. Okay. Next to calculate ROI. ROI. And here they have also asked ROE. So return on investment either can be rows or row, right? It can be ROA also, but asset information not given. There are 3 return on investment, no? Rows, ROA. Yeah, asset information not given. So we can only calculate rows and ROE. Now for this, you want to create one more table. No, that means here only we'll calculate. Now how do you get rows, people? EBIT by capital employed into 100. So EBIT is here, capital employed 20 lakhs. That they have given. Calculate rows. How do you get return on equity? You will take EBIT or you will take EASH. Here EBT, EAT, EASH, everything is same. Divided by equity. What is equity ka value? 10 lakh. Calculate over. This is faltu. This is a third requirement and fourth requirement. Yes, na ja. So second, third, fourth requirement, I've done it in one table. So far good, everybody? Okay, next, they did not stop there. Looks like Hanumantan Bala going on. Fifth one, now they ask leverage. What? Leverage. Sir, business risk, which leverage? Financial risk, combined. They could have said OL, FLCL, no. And now they're saying computation. You have to present leverage in this way, in this table format. What computation you already know. What is operating leverage ka formula? Contribution by EBIT. Financial leverage? EBIT by EBT. It's OLS or CLS, OL into FL. This is dependent on their asking. OL is dependent on what? Leverage is a fixed cost study, no? We have 2 fixed costs. Fixed operating cost and fixed financial cost. OL concentrate on fixed financial cost or fixed operating cost. So this is what? This is dependent on FOC. Financial leverage is dependent on financial leverage is dependent on fixed operating cost or fixed financial cost. This is financial cost. Combined leverage is dependent on both. That is your dependency. Now they are asking the effect to. This leverage measures effect on what and what? I we already know. Financial operating leverage measures the relationship between sales and EBIT. How sales affect your EBIT? Financial leverage measures the relationship between EBIT and EPS. This one, sales. Faltu. Chumma one, they're trying to make a mountain out of a molehill. Very straightforward this is. That's what I've written here. Okay, now. The question did not end there, pa. But very, very doubtful that leverage and all will be asked so much. Because leverage is a 5-marker topic. For 5 marks, this much and all they'll ask. If at all this much they ask means they have to give at least 8 marker. But anyway, RTP, so I will not question. No? Sir, you already know, favorable financial leverage. You already have calculated. What is that? Now read this only if you want. If ROI is greater than the interest rate, what do we call it as? If return is greater than the cost of debt, it's a favorable financial leverage. If it is equal means neutral. If it is lesser means unfavorable. They have given equation. You just need to add one word. Favorable, unfavorable, neutral. That's what they are asking. Theory. Now next page they asked again you calculate ROE, return. Return we already calculated. No, that is over. Leave that. We already took that. Fine. We are already bored of leverage now. This question. Yeah. So that much they have asked. But overall I feel this is easy only still. Just that they have asked too many requirements. So but pretty okay, manageable wala question. And this problem according to me over. You need some review or no. It's like enough. Yeah. Done. Okay, this is over. Next. This is also a good question according to me on investment decision. Investment decision, I think they've added easy but good framing again. Okay. Yeah. So let's see what we can learn from this particular question. Equip Lease of Financial Services is a specialized equipment leasing company. So what do is we buy the asset and we give it on lease. That's how we operate. That's our main line of business. We have been operating since 15 years. Awesome, good for us. The business model always involves purchasing high machinery and leasing. We know, no. Lease means that only. No, you purchase and lease. Company has built strong reputation. Come to main thing, pa. You purchase the asset for how much value? 10 lakh. And amount is paid upfront. At year 0. Useful life, 4 years. Salvage value, nil, because they're saying technology becomes absolute. We can't sell the asset for anything. Depreciation, this is good, check. Depreciation for tax purpose. We know that in investment decision, we have to take depre based on income tax, not as per accounts. So they've given depreciation can be claimed by equip lease. Equip lease is us, that's our company, under either straight line method or under units of production method, UOP. Income Tax Act is allowing us either to follow SLM method or UOP, units of production. Units of production means using machinery will produce the goods, no? In that ratio, you can calculate and claim depreciation if you know that particular production details. Fine. Now, lease rental earned by the company is subject to tax. 1 second, everybody. I just now want you to clarify one information for me. Depreciation for the company is what? An expense or income? For the company, we have purchased the asset. So, depreciation is an expense or income? Obviously expense. What expense? Non-cash expense. But yeah, have a little clarity on this. This is expense. Lease rental. Lease rental is an expense or income? Sir, we are leasing the asset. That means we will pay the lease rent or get it. That means lease rental is a income. Yes, sir. Now, why did I write this is on expense? Due to expense, your profit will reduce and your tax also will reduce. I mean, on expense, you will get tax benefits. On expense, you will get tax benefit. On income, you will get the tax benefits or pay tax. On income, you'll have to pay tax. Are we comfortable with this? I'll use this information a little later on. I'll come back to that. This is okay, no? Now, what is the tax rate? 25%. Fair enough. Tech manufacturing industry. So, this is probably the company whom we want to lease it out to. We are equip lease. So, now maybe we'll buy the asset and lease it to this tech manufacturing industry. So, they're growing precision engineering. They've approached us so, and they've shown interest in leasing. And they've given certain data. Check. The machine's usage follows graduated ramp up pattern based on the tech's order book flow projection. Production capacity they've given. Now we will lease this machinery to them. Now using that machinery, they will produce the goods. First year, they're saying we'll produce low, then medium, then high, and then peak. As the number of years grow, production will reduce or go on increasing. First year, we produce how many units? 1, next 2, next 3, next 4. That means what is the production ratio? 1 is to 2 is to 3 is to 4. Why do I need this? As per income tax, we, the leasing company, we can claim depreciation on straight line method or based on units of production. Units of production is in what ratio? 1, 2, 3, 4. So we can claim depreciation. Why 10 lakh I've said? What is this 10 lakh? You purchase the asset for what value? 10 lakh. What is the salvage value? 0. So 10 lakh you can either depreciate equally in straight line method or 10 lakh you will depreciate in production ratio 1 is to 2 is to 3 is to 4 and claim it. Both options are available to us. Correct. That's what depreciation I've called out here. Move on to the next one. This pattern is typical for business scaling up production with the new equipment. Okay, fine. They're saying that pattern is justifiable. This is what they say. We don't need that. We just needed the pattern. Okay. Clients want the company to charge lease rental based on the client's utilization pattern. 1 is to 2 is to 3 is to 4. Now we are leasing company. We will lease the asset at free of cost or collect lease rental. Collect lease rental. Our customer is saying don't charge same rent. Don't charge same rent. You charge lease rental based on this production pattern. Production pattern is what? 1, 2, 3, 4. That's what client is requesting us. Don't charge same rent every year. Charge based on the usage pattern, which is 1 is to 2 is to 3 is to 4. Now, Vikram Malhotra, Chief Credit Officer of Equipment Lease, is tasked with the structuring appropriate lease agreement. This some officer, he has to make a lease agreement. He faces several strategic decisions. That means you have to help him in all this decision. He's cracking his head for this. Help him out. First, check how much portion of the cost is recovered. Carefully read. How much portion of the cost? Stop. Cost for us is, we are leasing company. First, we have to buy the asset. How much did we buy the asset for? 10 lakh. Okay. how much percentage of the, how much portion rather is of the cost is recovered from tax saving on depreciation under both the methods. What are the both the methods? SLM, units of production. Understood? Everybody, what they're trying to say. Now people, how much did we invest? 10 lakh. When did we invest? At year 0, we invested 10 lakh. Now depreciate. See, we have purchased the asset means we will only claim depreciation. We have not sold the asset. We have given the asset on lease. Means we will claim depreciation. Correct? No. Now, who will book depreciation? The client or us? Because asset is ours. Now, excuse me. Depreciation for us is an expense. Just now we said on expense you will get tax benefit. On expense you will get tax benefit. That means people, this is a cost, no? 10 lakh is a cost. Due to depreciation, I am getting some benefits. Yes, everybody. So that is what they are asking. How much is the total benefits you have already got in the form of depreciation? That is very easy, no sir. Depreciation, if it is straight line method, means 10 lakh is the original cost, salvage value is 0, divided by life is 4 years. So depreciation is 2.5 lakh every year. No macha. On depreciation, this is an expense. On depreciation, you get what? Tax benefit. So what is the tax rate? 25%. You'll get a benefit of 2.5 lakh or 2.5 lakh 25%. 2.5 lakh 25%. How much is that? 60 to 500. Yes, sir. Oh, sir, benefit is 60 to 500, sir, for 1 year, sir, for 4 years. Multiply, sir. Nah, wait. Why? Sir, depreciation, you will get it immediately or end of year. So, first year, at the end of year 1, you will get benefit of 60 to 500. Second year, again, you will get a benefit of 60 to 500 due to depreciation. Third year, again, due to depreciation, you will get a benefit of 60 to 500. Fourth year also, how much? 60 to 500. Okay, na? I mean, this benefit is on present value platform or future value? This cost you incurred in future value or present? Present. That means what you have to do? This is the benefit expressed in future value terminology. Find out the present value. That's what we used to do in NP, we know. Take the future cash flow and multiply discount factor. Okay, everybody. So, understood? So, this is your future cash flow. Multiply by the discount factor and you will get the present value of benefit. That much you have already recovered because of depreciation. Out of this 10 lakh, this much present value you have already recovered. Balance we have to recover from lease rent. Goinda, got it. Pakka. That is what they are asking. Easy question. Don't worry. But yeah, when you first time when you interpret it, it will be like, what are they asking? At least you are getting the question. Solution I'll show. I've just written in short format. How to present it, I've presented. I'll show it to you. Pakka, now everybody got it? And now I am having a little buku. You give a recap for me. Just tell me what you understood. No? It can be a team effort also. I don't mind. Chorus beda. One stop, other can pick it up. Depreciation. No? She said depreciation, that's my thing. Then she's like, pass. Now, depreciation is an expense. On that, due to expense, tax will reduce. I mean, that is a benefit. Okay. So, that is what they're asking. How much portion of the cost is recovered from tax saving due to depreciation? Okay. But the problem is depreciation, you will get it immediately or end of every year. Means depreciation benefit you will get, no doubt. But you will not get it immediately. You will get it at the end of respective years. How many years we are planning to lease it out? 4 years. Means depreciation benefit you will get over a period of 4 years. So this is on future value platform. So now we have to get this on a present value platform. That is a total benefit we have got due to depreciation on present value terms. Meaning that much. Suppose this comes to, let's say, I don't know, we have to multiply present value and get it. Suppose after multiplying present value, after multiplying all the discount factor, let's say you got the value to be 1,20,000. Assumption. 1 lakh, how much? 20,000. That means people, how much did we invest to buy the asset? 10 lakh. When? Now. How much benefit I have already got due to depre? 1,20,000. Now, means balance, how much? Balance is 8 lakh 80,000. That if I recover through lease rental, I think I'm happy. My investment is fully recovered. Understood? Obviously, I would want to recover more because I don't run the business at charity, right? I want to make more profit also on this. But when I talk about investment recovery, out of 10 lakh, in my example, 120 is already recovered. In what format? Depreciation ka tax saving format. Balance, if you recover through lease rental, I think it will be no profit, no loss for me. That wala case. Yes, Saji. Okay, that's one they've asked. I'll read all the requirement once. So, find the portion of investment to recovered from lease rental. That you already know, no? 10 lakh minus 120. 10 lakh minus 120. That way, balance you will recover from lease rental. But you will have to solve under both the assumption. What is that assumption? One when depreciation is under SLM, another one is under units of production. That means you have to solve under two case. When depreciation is charged under SLM, one when the depreciation is charged under units of production. Third one, determine the minimum lease rental needs to be recovered to recover the balance cost of investment after adjusting tax shield on depreciation. Under both the depreciation method, if equipment lease us, we charge lease rental uniformly over 4 years. That means we are charging lease rental on what basis? Same every year. Or second case mein, lease rental follows client's utilization pattern. That is 1:2:3:4. Oh, that means another 2 case here. So basically there are 4 cases. Can you tell me what are those? One, no, lease rental. Lease rental can either be charged on a SLM equal basis or units of production. This is case number 1. This is case number 2. We have sold the asset or we have leased the asset. That means we will only charge depreciation. Depreciation either you can charge based on SLM or you can charge based on units of production. This is your case number 3 and this is your case number 4. All the 4 cases you need to give out the answer. Fine. Now, how to do it? Presentation, I'll tell you. It's an easy question only. Just watch out. So far, okay? Now, everybody, check here. Some basic data. What is the original? Tell me. Let's see how you remember or not. What is the original cost of the asset? 10 lakh. Residual value? 0. Life of the asset? This everybody remembers. Huh? Now, first, let's go for depreciation under straight line. Depre under straight line. What will be the depreciation every year? Original cost 10 lakh minus salvage value 0 divided by life 4 years. How much depreciation per annum? Depreciation per annum will be 2.5 lakh. Correct? Now, depreciation is an expense. You will get what? You will get the benefit on what benefit means? Expense is a benefit or tax? Due to this expense, tax will reduce. Okay, so tax saving is the benefit. Yes or no? So what we have to do here? What we'll have to do over here? Tax saving every year due to depreciation is how much is the tax rate? 25%. So 2,50,000 into 25% due to how much is that? 60,500. This is the benefit we will get every year. Correct, people? Everybody comfortable? Because due to depreciation, tax will reduce every year. What is the tax rate? 25%. So take the depre amount and multiply tax rate. That will be the benefit that you will get from the depreciation every year. 60,500. 1 year or every year? Every year. Is this number changing or same every year? But 1 second, hang on. Or maybe just I'll quickly show here. Year 1, 2, 3, 4. What is the benefit you have got? 60,500. This 60,500 first you will get at the end of first year because depreciation we charged at the end of the year. Again 60,500 benefit you will get at the end of. What happened here? Okay, let it be. Again 60,500 benefit you will get at the end of third year. Again 60,500 at the end of fourth year. That means all this benefit you will get it now or in future. But we want it on future value platform or present value platform. How do you get present value? Multiply discount factor. Number is different every year or same every year? I mean, should you want to take each year ka number or multiply PVIF? PVIF or PVAF? So that's what I've done here. Each year ka cash flow is how much? 60,500 multiplied by PVIF or AF. What is the discount factor? Somewhere we saw that. Where is that? Where ma? Cost of capital discount factor is 10% given. So find out PVAF for me at 10% for 4 years. 3.170. So 60,500 into 3.170 will give you total present value of savings 198,125. Any doubt in this number? We'll go working note by working note, easy over here. Watch out. This is the benefit when depreciation is under which method? SLM. Is this the only applicable, or you have units of production also? Units of production also. Can we do that, or you need some more time here? Can do? Is units of production ratio same, or 1:3:4 is? Means depreciation every year will be same or different? Calculate. 10 lakh is the cost of the asset. You will depreciate in 1:3:2:4. How much will be depreciation? 1 lakh, 2 lakh, 3 lakh and 4 lakh. That's a depreciation. Now can we use PVAF or PVIF? Because each year ka depreciation same or different? This is every year ka depreciation, correct? Benefit means depreciation or tax benefit. So benefit means what? Due to depreciation, tax will save. How much tax you will be able to save? 25%. Take depreciation amount and multiply 25%. 1 lakh ka 25% how much? 25,000. 2 lakh ka 25%. 50. 3 lakh ka 25%. 75. 4 lakh ka 25%. 1 lakh. This is your depreciation under units of production method. When we multiply tax rate, you will get the tax savings due to depreciation. Understood? Everybody good? This was 62,500 in the last case. Same. It was 62,500 in the last case. But that 62,500 was different every year or same every year? Hence we used what? PVAF. Is it same every year or changing? So what we have to use? PVIF. So discount factor at 10% only, but you take each year ka discount factor. Now this tax saving of 25 you will get immediately or at the end of first year. So future value. This 50 ka benefit you will get at the end of second year. Again future value. So all these are future value. To get present value, we multiply discount factor. Multiply the discount factor, you will get present value. Any doubt in that number? That is what they asked. What is the benefit you will get due to depreciation under straight line method as well as units of production? Observe. Aram se we will go over here. This is one main. Everybody okay? What done? Okay. Next is depreciation. You tell me, how did you get this particular 25,000 for me? I'm just curious about that. How did you get this 25,000? You took depreciation and multiplied tax rate. Keep that in mind. You took depreciation and multiplied tax rate. Why? Why depreciation? Again, the sentence carefully. Depreciation is an expense. On expense, you will pay tax or save tax. Save how much tax? 25%. Hence, we took 1 lakh ka 25%. Pakka. Later, if you ask doubt, I will not answer. Pakka. Now, lease rental. Lease rental. Given a missing. But leave that portion out for the time being. Lease rental is an expense or income. Income. On income, you will save tax or pay tax. Pay tax. That means on whatever you did for depreciation, same thing you will do for lease rental income also. No, depreciation is an expense. On expense, you will save 25% tax. But lease rental is a income. On income, you will save tax or pay tax. That means 100 rupees lease rental income if you collect. 100 rupees lease rental income if you collect. Really, company will get 100 rupees or our fine Nirmala Sitharamanji will take 25. On income, 25 rupees will go away as tax. What will be our true sense mein income? 75. Correct? That means income for us is not 100, it is 75. Agreed. Because on income, we have to pay tax. Comfortable, no people? That means our cash inflow, because for all this decision, we need cash flow, no? So our cash inflow, though we collected 100 rupees, net mein our cash inflow is 100 or 75? 75. Yes. Sir, people from 100 directly you can jump to 75. Tell me. This is before tax, this is after tax. 100 is before tax, 75 is after tax. From before tax, how do you jump to after tax? Take the lease rental and you do 1 minus tax rate. 1 minus tax rate. So 100 into 1 minus tax rate. What is tax rate? 0.25. 100 into 0.75. How much people? 75. Agreed. That means, again I'm asking. On lease rental, you will multiply 25% or 75%. The whole drama was on this. Everybody got 75%? Pakka. Now, when I multiply 75%, you will not say why, you, who and all, no? Pakka? Okay. Now look at this. Lease rental given a missing. Lease rental also, we have two options, either to collect on straight line basis or on a units of production. First, let's assume normal things. So, lease rental on what basis? Straight line basis, meaning every year we'll collect same lease rental from our client. But is that given or not given? So let's assume X or A, B, C, D, whatever you want to assume. So here I've taken it as let lease rental be X. Okay. Sir, we need for our analysis income or cash flow. Cash flow. On income you have to pay tax. On income you have to pay tax. If I collect X rupees as lease rent income, like previously 100 rupees if I collect as lease rental income, for me 100 rupees will come or 75 rupees will come, because 25 will go off as tax. That means what is lease rental after tax basis? If it is 100 means number is 75. Now is it 100 or X? If this is X means, if lease rental before tax is X means after tax it will be what? X into 1 minus tax rate. X into 1 minus tax rate. Correct? Huh? So tax rate is 0.25. So how much is it? 0.75. I'll give you a minute. Is this number okay for you? Is this number okay for you? This is the final cash flow I will get every year. Every year. Will this number, look at the heading, I'm charging lease rental on what basis? SLM. That means every year number will change or same. That means you have to have 4 columns or PVAF method. PVAF method. Remember NPV. If you have your future cash inflows, this is your future cash inflow. How do you calculate NPV? If you have your future cash flows, what do? Multiply discount factor and get them on present value platform. So 0.75, or if you want one more, 0.75 you will get now or at the end of first year. If you want, once again I'll write here, year 1, 2, 3, 4. First year you will get 0.75x. Second year also different number or same number? Because it is what basis? SLM. Third year also 0.75x. Fourth year also 0.75x. That means all these are on present value platform or future value. But we are doing the decision future or present value. Hence what we have to do? Multiply discount factor. Each year ka discount factor or PVAF? PVAF. At what rate? 10%. For how many years? 4 years. We have to find or already found. How much is that? 3.170. So take 0.75x and multiply PVAF. PVAF is 3.170. How much is this number? 2.38x. That is the present value of lease rental for how many years? 4 years. Okay, Naji. Is this number good, Aji? Practice this question. Okay, now you will say yes. So after going home, you will be like, "Thoo." That wala feeling will come. So practice this question once immediately. If you want, you'll anyway upload this video also, so you can refer to that later as well. This is good. Next, sir, this is charging lease rental on what basis? SLM. Is this the only option available or units of production is also there? Units of production is also there. What is units of production? What is the ratio of units of production? 1, 2, 3, 4. That means if let the lease rental be X. Okay, let the lease rental be X. First year lease rental will be X means second year will be X only, it will be 2X. Production is 1, 2, 3, 4. So first year ka X means next year it will be 2X. Next year it will be 3X. Then it will be 4X. This number is same every year or changing every year? Once again, same thing. Make me happy. This is lease rental income. This is lease rental income. For our decision, we need income or we need cash flow. Cash flow. This is your income. On income, you have to first pay tax. Then only you will get cash flow. That means how much tax you will pay on this income? 25%. After paying tax, how much will remain with me? In my income, 25% government will take. How much remains? 75%. So, I mean, this, if you want to get this on an after tax basis, what you will do? 1 minus tax rate. I mean, you will multiply by 0.75. 1x into 0.75 is how much? 0.75x. 2x into 0.75 is how much? 1.5x. 3x into 0.75 is how much? 2.25. 4x into 0.75. 3x. Yes, sir. Now, all this income you will get immediately or in future? This 0.75 you will get at the end of first year. This 1.5 you will get at the end of second year. This 3x at the end of fourth year. So, that means all these are what? Future value. How do we get them in present value? Discount factor. These numbers are same every year or different? PVAF or PVIF? No, PVIF. So, take the number and multiply discount factor for each year. You will get the present value. And add all that, you will get how much? 5.66x. Done, Ji. I'll give you a minute, Ji. Observe, Ji. Observe. I will take a water break. Now, last finishing touches. So, you need some more time to review now? If you need, I'll wait. I don't mind. Anyway, we are not understanding why wait, no? Can you give me a summary of what we have done till now? Would you like to try? No, I give Allah, you give. Yeah, please, you only give, no, sir. Done. Fine. Okay, listen. We purchased the asset for how much value? 10 lakh. Now, on asset we have purchased means we can charge depreciation. We have two methods to charge depreciation. SLM, units of production. SLM means we will have same depreciation every year. So 10 lakh is a cost, salvage value 0, life is 4 years. How much is depreciation every year? 2,50,000. Depreciation is an expense. Due to expense, we will pay tax or save tax. Save tax. Saving tax is a benefit. It's a cash flow. How much tax you will save? 25%. That means take every year ka depreciation. Every year ka depreciation multiply 75% or 25%. 25%. Because due to expense, 25% tax saving benefit you will get. So take every year ka depreciation and multiply 25%. You will get the number. Okay, Naji? How much is that? The 2,50,000 ka 25% if you do, you will get 62,500. But this 62,500 benefit, you will get it immediately or end of respective years. First 62,500 benefit you will get at the end of first year. Next 62,500 benefit you will get at the end of second year. That means all these benefits are on present value platform or future value. Hence multiply what? Discount factor. But since the number is same every year, should we have to use PVIF or PVAF? So hence we took 62,500 multiplied PVAF and got the total benefit in present value terms due to depreciation. How much is that? 1,98,125. This is what depreciation ka benefit under straight line method. Now what is one more method acceptable for depreciation? Units of production. In units of production, you will depreciate the asset based on production pattern. What is a production pattern? So 10 lakh amount of asset will be depreciated in 1:2, 2:3, 4. So what will be depreciation for first year? 1 lakh. Second year, 2 lakh. Third year, 3 lakh. Fourth year, 4 lakh. This is your depreciation every year. Okay. On depreciation, you will pay tax or save tax. Saving tax is a benefit. It's an inflow. It's a cash inflow. How much you will save? 25%. So take the depreciation, multiply 25% inflow. You will get it. But all this inflow will happen immediately or respective year ending. I mean, all these are on which platform? Future value. Multiply discount factor. But is the number same every year or changing? So PVAF or PVIF? PVIF you use and you will get the present value of the benefits. Due to, basically depreciation ka present value of benefits they have given under units of production method. Now we have only this SAW or we have lease rental income also. One more component we have called lease rental. Now lease rental is an income. Lease rental is a income. On income we will save tax or pay tax. 100 rupees lease rental income if you collect means how much you have to pay as tax to the government? 25% of that. 100 ka 25% is 25. So how much will be left with us? That means in true sense cash flow for us is not 100, it is only 75. Okay, now from 100 directly can you get 75? Yes, how? 100 lease rental into 1 minus tax rate. Okay, Ji. Now lease rental I have assumed 100. Are they given? No. Just for explanation I took 100. Since they have not given, we have assumed lease rental to be X. Lease rental to be X. Now like depreciation, lease rental also we have two options. What are those? Either charge lease rental on an equal basis, SLM basis, or based on units of production. If you charge lease rental on a SLM basis, every year ka lease rental will change or same? Same. How much? I have assumed that to be X. Okay. Though you have collected X rupees from your client, X rupees will come to you or 25% of that will go to government. Lease rental is an income. Of that 25% will go off to the government. That means for us, finally, how much money will come? 25% or 75%? 75%. That means X ka 75% if you do, you will get 0.75X. This 0.75X, I will get it at the end of every year. Different number or same number? Same number. I mean, this 0.75 I'll get it at the end of first year. This 0.75 I'll get it at the end of fourth year. This is present value or future value. How do you get them on present value platform? Multiply, but different number or same number? So PVIF or PVAF? took 0.75x and multiplied at 10% ka PVA for 4 years. And you got this particular number. Yes, Ajay. Now, same number will work out for what basis? Units of production. Lease rental is how much? X. If first year ka lease rental is X, means second year it will be X or 2X. Because units of production is in the ratio 1:2:3:4. If first year is X, means second year will be 2X, then 3X, then 4X. This is the income. This is the income. On income, how much will go away as tax? 25%. So what will be our cash inflow? 75%. So take this number and multiply 75%. X ka 75%, 0.75. 2x ka 75%, 1.5. 4x ka 75%, 3. But all this income you will get it now or in future. This 0.75 you will get at the end of first year. This 2.25x you will get at the end of third year. So all these are what value? Future value. Multiply discount factor to get the present value, which is this. That's all we have done till now. Correct, Ajay? Manageable. Now last setup. People, they read this line once again. No? Determine the minimum lease rental to be needed to be recover the balance cost of investment after adjusting tax shield on depreciation under both the methods. Once again, determine the minimum lease rental to be recover the balance cost of investment. 1 second. How much did we invest? 10 lakh we invested. Depreciation is an expense. On expense we paid tax or saved tax. So that's a benefit. Now 1 second. If you're following straight line method, how much benefit you will get? 1,98,125. Sir, I bought an asset worth 10 lakh. I already got how much benefit due to depreciation? 198,125. I mean, should I have to really recover 10 lakh from my client or balance is good enough? What is balance? 10 lakh minus 198,125, which is 801,875. Correct? This I have to recover as what? Lease rental. Understood? Everybody good? This is what we have to do. Pakka. But once again, check everybody. Here there are 4 cases. What 4 cases? 1, when the lease rental is based on units of production. I can charge lease rental based on units of production. I may charge lease rental based on units of production. My depreciation can be on SLM or it could be on units of production. This is one case. Now, lease rent I will charge equally. But depreciation I can charge equally or based on units of production. Any combination is okay. So 4 combination. All the 4 you need to solve. Correct? No. Correct on, people. Getting no. Yeah. Cost of investment is same in every case. How much is that? 10. Now this, if you figure out this, it's very easy. If you put up the table. Now check. Don't forget the heading. We are in, what is the heading? Lease rental based on units of production. Okay. And depreciation is on what now? SLM. Now if your depreciation, if you're claiming on SLM basis means you already got some benefit. What is the benefit you will get when you charge depreciation on SLM basis? 198,125. So wherever you see depreciation on SLM, which figure you will update? 198,125. Update that. Okay now? Yes sir. Correct no. Sir, if depreciation is based on units of production, how much benefit have you got? If depreciation is based on units of production, how much benefit you have already recovered? 188,650. Wherever you see depreciation based on units of production, you will write what number? 188,650. This is depreciation based on units of production. 188,650. This is depreciation based on units of production. 188,650. Now very simple. Updation is okay now. In 10 lakh mein 198 you have already recovered. In 10 lakh mein 198 you have already recovered. What is the balance investment to be recovered? 801,875. How are you getting that? 3 is equal to what? 1 minus 2. These took a minus this number. 10 lakh minus 188,650. This number. 10 lakh minus this number. Like that I've calculated. Okay na sir. And how will you recover this? Through lease rental. And you already know lease rental in X terminology. Yeah. 2.38x, 5.66x. 2.38x, 5.36. Yes, no. 1 minute. Careful. This is 2.38x when 2.38x will be the answer when you charge lease rental on SLM basis. whenever you say lease rental is on SLM basis means this. Correct? No, lease rental equal means SLM basis. Whenever you see this number, you will update which X. So 5.66 or 2.38. So that means here lease rental is on equal basis. That means this is what number? 2.38, 2.38. Yes, correct. Whenever you are charging lease rental on equal basis, what is your total lease rental? Here, very careful. When you're charging lease rental on SLM basis, present value of lease rental will be 2.38x. Here you're charging lease rental based on units of production. So here can I write 2.38? No. 2.38 is a number applicable for what basis? SLM or equal? Which is, this is equal? No. Which is equal? This. So in this section, I will write 2.38x, 2.38x. This is which section? Lease rental based on units of production. Whenever lease rental is based on units of production, what is the present value of lease rental? 5.666. That means in these two sections, I will write 5.6 is 5.66. Yes, these two are equal. Because that's what I was able to recover. No, so 5.66 is equal to 8,01,875. So equate that. 5.66 is equal to 8,01,875 means how much is X? X is 8,01,875 divided by 5.66. How much, Guruve? 1,41,674. That is my lease rental. I will charge under which method? When I go for lease rental based on units of production, depreciation under SLM. Basically, these two you equate and get X. Calculate X for me here. 8,11,350 divided by 5.66. How much? 141,674. These two you equate and get X for me. These two you equate and get X from? Huh? This is a different number. Okay, no worries. 140, 348. What about this? These two you divide. 8,01,875 divided by 2.38. 3,36,922. That means this divided by this is correct number. This is your lease rental recovery. Easy question only, to be honest. Last May, you will have to be a little careful in terms of updating what value. That's all it is. And these sort of questions, if it comes, they will not modify much. They'll just change the name and they'll probably, instead of 10 lakh original cost, they may make it 20 lakh or 1 crore. That's ICA favorite answer. 1 0 they will add or 1 0 they will cut. And it will come in exam. Okay, so that's the way usually they do it. So you will not have much modification. Straight away, chapo. Same copy paste. Full marks. One good thing is when all these questions come, people, 90% of the students skip. And when tough question, a little tricky question comes, the instruction will be given. Usually it will be like, be a little lenient in terms of marks. Small working notes also will carry marks. Like depreciation will carry 1 mark and all. Because they know that people will not be able to solve, majority of them may not be able to solve everything fully. So they would like to give that lenient approach there. So hence, better to practice all these questions also once. Okay, Nasaru. That is about this particular question. And this one is same question we have. Question number 9 is working capital. It's a repeat question, nothing new. 10th is a theory question, not required. So this is about your RTP May 26 wala Athimka RTPs. Thank you.